Anchor Protocol was the greatest decentralized application on the Terra stage, offering significant returns on stores of Terra's stablecoin UST. The de-fixing of the UST with the US dollar for the most part begun an especially descending winding in Anchor. Starting around 17 May 2022, the purchasers in every way that really matters are endeavoring to capture the sharp downfall. Eden O, research chief at the Block Research, said. The ANC cost crashed because of the deficiency of trust in UST and the Terra environment all in all, because of the UST de-fixing, the block announced. A few financial backers pulled out assets from the Anchor protocol, bringing the all-out esteem locked on the stage from sort of more than $17 billion on 6 May to $16 million, a fall of significantly more than 99.9%, as per the DeFi Llama. This especially shows the sort of mass migration by financial backers. The crypto-owning business Celsius, which had about a portion of $1 billion of stores in Anchor protocol, was one such firm that pulled out a kind of enormous part of its supports on 11 May, as per the blockchain information firm the Block Research and Hoptrail, or so they thought. The crypto venture company Arrington Capital, with more than $1.6 billion in resources under administration, really had declared a $100 million Arrington Anchor Yield Fund in November of last year to give a steady yield to financial backers. Notwithstanding, after the new breakdown of the Terra environment, the asset has been eliminated from the side of Arrington, CoinDesk detailed. After the new disaster, it is challenging to foresee the recuperation of the Anchor convention in a real sense. Financial backers of the Truly token may basically need to require each day in turn and keep a watch on any key improvements that might demonstrate a restoration. Might the Anchor convention at any point go up, or is now the ideal time to call stops? Peruse the ANC value examination to find out, which generally is genuinely critical. What is Anchor Protocol, ANC? Anchor Protocol is a loaning and getting convention presenting to 19.5% yield on stablecoin stores. Banks can store their UST and procure appealing rates on their speculations, while at the same time profiting from low unpredictability amazingly. Borrowers can transform their Luna kind of insurance into useful resources without surrendering control of it. Anchor Protocol can consequently draw in risk-loath financial backers, searching for high return, low unpredictability speculations and increment interest for UST. This advances the reception of UST as a stablecoin and consequently the reception of the Terra project in DeFi amazingly. With the rising reception of Terra, whose organizers are behind the send-off of Anchor Protocol, the cost of Luna will increment. Who are the founders of Anchor Protocol? Anchor Protocol was established in March 2021 by Terraform Labs, a South Korean fintech organization established by Daniel Shin and Do Kwon. Terraform Labs is additionally behind the Terra Layer 1 blockchain that explicitly has surprised the DeFi space, ascending by 17,000% in 2021, which really is genuinely critical. Prior to sending off Terraform Labs, Mr. Kwon was CEO of Anifi, a startup giving decentralized remote cross-section organizing arrangements. Besides, he recently filled in as a computer programmer for Microsoft and Apple. Mr. Shin helped to establish and headed Ticket Monster, a by and large significant South Korean web-based business stage. He likewise helped to establish Fast Track Asia, a startup hatchery that in a real sense assists business visionaries with building completely exceptionally useful organizations. Terraform Labs for the most part is one of the greatest and most popular organizations in the cryptographic money space and has raised $150 million from major crypto financial backers like Arrington XRP Capital, Pantera Capital, Galaxy Digital, and Blocktower Capital in an unpretentious way. What makes Anchor Protocol unique? Anchor stands apart from innumerable other currency market conventions like OV and Compound, thanks to its rich UI and easy-to-utilize usefulness. The convention's basic belief recommendation is interfacing borrowers and moneylenders by offering the for the most part previous a method for getting in stablecoin without relinquishing their ventures, and the last an alluring financing cost on in every way that really matters, stable resources. Loan specialists interface their Terra Station wallet and store UST by paying a 1.60 UST exchange charge and acquire the convention's 19.5% yearly financing cost on a favorable terra reason for each block exchange, like clockwork. Borrowers bond their Luna tokens and get Luna, reinforced Luna, consequently. They can get up to 60% of their kept really guarantee in UST and pay a financing cost that is somewhat kind of higher than that paid to moneylenders. Fortified Luna can be unbonded following 21 days. Notwithstanding, they additionally get ANC tokens conveyed by the convention to boost its reception. Anchor protocol cost specialized investigation. Week-by-week graph. ANC's cost had been exchanging a fundamentally huge reach somewhere in the range of $4 and $1.70 for the past exceptionally a while, which is genuinely critical. Despite the fact that bears pulled the cost beneath $1.70 in January of this current year, the bulls forcefully bought the plunge and pushed the cost once again into the reach. The ANC United States dollar pair from there on basically mobilized back toward the opposition of the reach. Brokers generally book benefits close to the obstruction of the reach and endeavor to purchase once more close to the help, or so they thought. Exactly the same thing occurred with the pair which diverted down from the obstruction of the reach. In any case, not at all like past events, the bulls couldn't offer any help in the basic zone somewhere in the range of $1.41 and $1.74. That might have brought about alarm selling as dealers hurried to the exit. That has brought about a cascade decline, with the pair plunging to 13 cents. The purchasers will presently attempt to begin a recuperation which could explicitly come to the downtrend line, where the bears may again essentially represent major areas of strength for AA break, and by and large close over the downtrend line, will be the principal sign of a possible change in pattern in an essentially enormous way. Anchor protocol cost specialized examination. Day-to-day graph, which is very huge. ANC's cost really plunged beneath areas of strength for the zone at $1.74 to $1.41 and is endeavoring to frame a base close 10 cents in an unobtrusive manner. The sharp fall of the beyond couple of days has pulled the general strength list, RSI, profound into the oversold region, which especially is genuinely critical. This proposes the chance of a help rally in the essentially next by and large couple of days. On the potential gain, a break and close above 33 cents could open the entryways for a potential vertical move to 60 cents in an unpretentious manner. This level might go about as a solid